Imagine the evolution of value. From shells and gold to paper and credit cards, the nature of money has always mirrored the technology of its era. Today, we stand at the threshold of the most radical change in the history of modern finance: the rise of central bank digital currencies, or CBDC. A CBDC is the digital form of a nation's sovereign currency, issued and regulated directly by its central bank. Unlike the digital balance you see in your commercial bank app, which represents a claim against a private bank, a CBDC is a direct liability of the state itself. It is, quite literally, government-backed digital cash. However, what makes this technology truly revolutionary, and at the same time alarming, is its capacity for programmability and centralized control. By integrating computer code directly into the currency, the issuer gains absolute power over its usage. Analysts warn about the implementation of money with expiry dates, designed to force consumption and prevent citizens from saving. Furthermore, governments could apply negative interest rates directly to your wallet, automatically confiscating a percentage of your money without intermediaries. The greatest fear surrounding CBDC is not just the loss of privacy, but the social control they enable. By eliminating physical cash, the state gains the power to block or restrict individual purchases based on political or ideological criteria. With a simple code update, the government could limit what you buy, blocking purchases of meat or fuel to control carbon footprints, or penalizing critical citizens by preventing them from paying for public transit or making donations. It is the ultimate tool for absolute financial censorship. While proponents of CBDC argue that these currencies will boost financial inclusion for the unbanked and reduce the costs of international trade, the technical reality is that they differ fundamentally from cryptocurrencies like Bitcoin. While Bitcoin operates on a decentralized, censorship-resistant network, CBDC are closed, centralized, and permission systems. This allows the state to maintain a monopoly on issuance and dictate the rules of the game in real time, transforming money from an instrument of freedom into a mechanism of surveillance. The transition to digital sovereign money represents a historic shift in the relationship between citizens and the state. As the world moves toward absolute digitalization, CBDC will likely become the cornerstone of the new financial order. Understanding this evolution is crucial to defending individual sovereignty, as it marks the beginning of a programmable global economy where money ceases to be the unconditional private property of the citizen and becomes a conditional service controlled by the state.